listeners, welcome to another great podcast session. I'm Shivani Muthyala. As transactions these days are becoming more digital in nature, frauds are also becoming the most vital aspect to focus on. According to the latest industry report, about 41% of the consumers were reported becoming more vulnerable to fraud. That is mostly due to phishing or UPI or card scams. This growing number can only be brought down by enabling technology within the systems, whether it be by deploying AI or robotics or automation that can help in combating complex fraud attempts more faster and accurately. To talk in the same context, we have Manish Thakwani, who is the head of business development at JuicyScore. So let's welcome our speaker for the day. Hi Manish, how are you doing?
Hi, Shivani. I'm doing fine. Glad to be part of this conversation.
Pleasure to have you here today at Analytics Insight platform. So, first of all, could you tell our listeners what Juicy Score is all about?
Yeah, so I'll give you all a background. So first of all, I like to give you a context about how does this name comes by, right? When you hear the name Juicy Score, you'll be confused that why would you call something Juicy Score, right? So the funda behind that is that as the second half of the name says, score, right? So we're providing a score. Now, as we are talking about fraud and risk solutions, so our software, which is there, essentially it focuses on two major aspects. It focuses on certain fraud indicators which a device can throw, and then also we start to look at certain credit risk aspect information which we can sort of evaluate through the device, right? And the funda of calling it juicy is that basically our approach is that we squeeze juice out of every piece of data which we can sort of extract out of the device, right? As we say that, squeeze the entire juice out of the lemon, and then unless it's done, right? So that's what we do. We squeeze all the juice out of the data and then give you some sort of our clients as insights which can help them to detect fraud, then also able to reduce credit risk. So that's the whole genesis behind calling it Juicy Score. Now, secondly, to give you some sort of an information about where we come from. So, our company started in 2016 from Moscow. That's where it originated. And primarily, our clients were companies in the financial services space, banks, and lending institutions. But sooner or later, we expanded to other areas as well, because fraud is something which is not only limited to only financial services. It happens in e-commerce companies. It happens in it can happen in gaming companies, gambling, which is outside of India, right? And any online business for that matter is something which can be affected by fraud, right? So we have now clients not only in the financial services, but in the other space, online business space as well, right? So that's the whole genesis of it. And right now we are sort of present in more than 24 countries, having more than 85 customers who are our regular users, right? So that's the whole history of us and our product.
That's amazing. As you just took us, through the journey of Juicy Score. So, could you tell us what specializations and the services that the company is actually offering to its clients?
Yeah, absolutely. So as I said, that our solution is something which largely relies on the insights which it looks for specifically to identify fraud and also to identify risk. What it does is that it looks at the customer device. For example, let's just say you are using a particular device, right? So we are having a lot of digital interactions, like to open a bank account, you can use a particular device. To take a loan, you can use a particular device. To buy a product online on an e-commerce website, you'll be using a device, right? So what we do is essentially we focus on this particular device, which is being used to send an application or do a transaction. And then using that particular device, we are able to provide these insights. And how do we do it is that, there are there's a certain information which we pick up from the device being used by the customer, and then we try to first of all identify the device uniquely, which is a major challenge, I'd say, because usually what happens is that online businesses or even some of our competitors, what they're doing is they're using some one or two three parameters out of the device to give it an identity. But usually what happens is that the device gets formatted or starts undergoing software changes, like you must have upgraded your device to let's just say new operating system, or some updates are being received, but these parameters keep on changing. But our solution, what it's able to do is that it's able to use these parameters which we collect, which are more than 50,000 number actually, and we are able to sort of analyze those parameters, and we come up with a mathematical device ID, or a probabilistic device ID, you can call it, which is an identification of this device, which doesn't change for a considerable period of time. Through that, our clients are able to identify a device uniquely, and then, you know, then let's just say if there is a fraudster who's sort of using the same device to send multiple applications or multiple sort of to open multiple bank accounts using the same details. I mean, the details might change, but the device at the back would still remain the same. That particular guy will get caught there, right? That is something which is major, and then it's not only limited to device identification. In fact, we analyze a lot of these parameters, the 50,000 parameters which I talked about, and what we do is we sort of combine all of these factors, and then we come up with the certain insights for our customers, for them to analyze fraud, right? Which can sort of help them to sort of stop these applications or transactions at the very beginning, right? Even before the fraud sort of reaches a stage where there's a financial impact being seen, right? So that's essentially what we do.
That sounded quite interesting. And now, Manish, as technology is prime in most of the companies, while talking about the operations, right? So, tell us how Juicy Score is actually leveraging tech trends, whether it be artificial intelligence or big data analytics or ML or cloud, which are very trending these days.
So before I answer that, I'll just explain one particular thing which I missed talking about earlier, right? So we have to understand that when we are talking about a particular customer, right? If I talk about financial services specifically, there are two major things which we look at, which maybe a financial services provider will look at before they onboard a customer. Let's just say we talk about the loan scenario. Now, if you want to take a loan, what would a bank or a financial institution look at? Is that what is the capacity for you to pay? Capacity means that, let's just say I earn 1 lakh rupees a month. So if the bank knows that, so it knows that, yeah, if I'm taking a 50,000 rupees loan, then I'll be able to pay it back in, let's just say, 2, 3, 4, 5 months, right? Because I'm earning 1 lakh a month. The second thing is looking at the intention to pay. The intention to pay is something which is largely very difficult to sort of I'd say estimate, uh, because the intention can change, right, of the user, and then intention is something which largely looks at the fraud angle, where the guy even can afford to pay but doesn't pay because there is a certain thing which we have identified at the back, which could be a factor in gauging the information that that this guy will most likely not pay even though he can afford to pay. So our solution is something which focuses more on the intention to pay bit, and then to an extent also the capacity to pay. Capacity to pay, we have a lot of parameters to look at. So if I talk about the financial services industry specifically, there are multiple things which banks and financial institutions are doing, right? So if you want to take a loan, a bank or an NBFC company, they'll look at your credit score, which you usually call CIBIL score. Or what they will do is they'll look at certain other information of yours, because let's just say your bank account information and all of that, which they can sort of seek, and then see what is the average balance you maintain and all those things, to see that whether you'll be able to pay or not. But that thing largely fails when we are talking about NTC customers. NTC customers are customers who are absolutely new to credit, which do not, maybe haven't had a bank account in the future. They have no CIBIL bureau history available. So what do banks and financial institutions do there, right? That's where the challenge comes in. And I think here is where this your AI, ML, which you call artificial intelligence, machine learning, and all these aspects come into picture, right? So if I talk about our company, what we do is that what we are able to do is that the first thing, of course, as I mentioned, we are able to build this device ID, device identification, which is whether the device is identified uniquely through using this ML approach. In fact, we have a deep machine learning algorithm which we use to essentially get this particular information. That is one. And secondly, what we do is that the point which I was making earlier, the 50,000 parameters which we are collecting, what we are doing with that is that using this DML or deep machine learning approach, we are coming up with highly predictive attributes, which basically can be leveraged by my client in their decision engine. So every financial institution or an online business, for that matter, has some sort of a rule engine or a decision engine in place. If I just put it in very simple words, so there are some sort of automation already in place. with these institutions, right? What we essentially do for them is that we provide them additional insights through this artificial intelligence and deep machine algorithm which we have built, which can further strengthen their decision engine to make a action on a certain application. Let's just say Shivani goes to maybe a company to take a loan in a digital way, and then they are using some sort of a solution to automate that entire journey, right? So what we do is we provide them additional enabling factors specifically related to the fraud and credit risk, which can help these institutions to make a decision faster and effective, like whether Shivani should be onboarded or not, right? Looking at the fraud and credit factors. So that's essentially what we do. And through this, our clients are able to sort of accept better, I'd say, good quality applications, and then they're able to focus on them in a better way as compared to maybe not using us. Because of course every application goes through a KYC process where you provide certain documentation and all of that, and certain information would be looked at before a final loan is dispersed or a bank account is opened. But if you are able to provide good information at the very beginning, so then my financial institution, who's my client, is able to save time on not doing all those things for a particular customer who may not be a right one to be onboarded, right? So that's essentially what we do around the technology front.
Great. And happy to know how the company is actually using tech trends, to benefit the users as well as, to automate the processes. So these days, frauds are very common everywhere, right? Especially in the post-pandemic setting where everything is digitalized. So what, according to you, are the prime factors, behind the spike in the digital lending and fraud that you just talk about? And in the past few days, what is the take on yours?
Yeah, so I will mainly talk about digital lending scenario, because a lot of our customers are digital lenders where they have to issue loans in a matter of few seconds, right? And then actually, while you are trying to improve the customer experience, what I mean by that is to get a loan in a few seconds, there have to be multiple checks which have to be done, right, in a very short span of time. So what essentially we do is that we provide these digital lenders some insights to make these decisions quickly. But to answer your question, why are we seeing this sudden spike, is that there is one thing I think primarily which we should understand. There are two types of fraud which can happen, right? One is of course where, like me, I'm could be a customer of a digital lender who basically sending an application to them for a loan, right? So you must have heard, like, early this year, what happened was that the Reserve Bank of India actually blocked certain Chinese apps which were involved in malicious activity, where they just placed their applications on the Google Play Store, and gullible people who actually were in need of money due to the second wave, they sort of just downloaded these apps, and then these apps asked for certain documentation, certain information, even asking for their contact information and location, address, everything they collected. And then and the rate of interest were like 30%, 40%, all these apps charged. And then when the person was not able to pay up, they started calling their contacts, and then started threatening them, that this guy is someone who's not returning my money and all of that. So that is something which is where you basically are focusing on the any lending institution being a bad one, right? And the other side is where the customer is actually the one who's trying to defraud the financial institution, where, let's just say, I'm the fraudster, and then what I'll be doing is, because I know that right now a digital lender wants to issue a loan in a matter of a few seconds, so it's possibly very few checks they'll be doing, right? Possibly two, three, or four maximum. That's the only one. They'll be checking my mobile number or some location and other things, and then we'll be issuing a loan. So what these people try to do is that they try to use different identities, and then they try to send a loan application, even though the person sitting at the back would be one, but we using different identities. Or sometimes we become Shivani, sometimes we become Manish, sometimes we become Purvi, and then because he knows that these guys have some sort of good history and all of that, so possibly the loan would be approved in a matter of seconds, right? So our focus is essentially to save the financial institution from these guys. The other part, of course, is also a problem, but that is something which is a different problem which we can't solve. That is something which possibly has to be solved through policy, which the government is actually working on. But this particular problem, where we can stop these guys from defrauding financial institutions, definitely where we can play a role. Right. So just extending to what I was saying, and why have we seen the sudden spike now? So I have to answer that particular question. Is that there are three things to basically understand in lending scenario. Three different terms are there. One is which is called a delinquency. Right. Now, what delinquency means is that, let's just say I have taken a loan. Right? I have taken a loan and then I'm not able to pay it back within the period which was requested to me. Like, let's just say I had to pay it back in 60 days, but I wasn't able to. So my account turns delinquent. The second thing is default. Default is something where if the guy is not able to pay his loan EMIs multiple times, he basically is delinquent multiple times. So that becomes a default, right? That's the second bit. And third thing is fraud, where the guy only took the loan to not pay it up, right? He took the loan, but he had no intention to pay. So for banks and financial institutions, all these three terms don't really matter. For them, what matters is the money coming back with the interest which rate which is applied, right? So they don't really treat all these three things differently, but their focus is to get their money back. So our solution, what is doing is essentially focusing on all of these aspects. And or any financial institution, if they're shelling out a loan, there has to be some sort of NPA which is expected, which is what you call as non-performing asset, right? So on an average for a digital lender, if I may say so, the NPA varies from 3 to 4%. Let's just say they have given out 100 loans, then out of that, three or four would turn to be NPAs, where the money doesn't really come back. And for some, it may be higher depending on the checks which they do in the beginning, right? So essentially, I think what has played a role in this particular spike being happening is because the digital lending institutions have grown like anything, right? Because earlier you don't even need to have a banking license to give money, right? Now RBI actually coming strict on these institutions, where even a fintech company, a technology company which is into financial services, can actually partner with an NBFC and then start issuing loans. So that's why you see the industry being projected to be around $350 billion till 2023. There's a BCG report which states that the digital lending industry is going to be reaching that stage. And then if you consider that a number of 3 to 4% of NBA, even on the lowest side, you still see 15 or $16 billion would be lost out of this $350 billion till 2023. So and possibly another reason for this spike is that of course we've gone through the pandemic. People don't have money. They've lost their jobs. Inflation is hitting on them, right? So they're not able to manage household expenses. So a lot of this has been, I'd say, delinquency and default. And then also a lot of it has been, I would say, an intentional approach by these fraudsters to not pay up, right? So a combination of this has actually led to this particular spike, where people are not able to pay because they can't afford, and some people who are actually taking a loan to basically take it and then scoot later and then not come back, because they are not using their own identity. They're using some random guy's identity who they know that of course if they take the loan on their name, it will be what's going to be approved. So it's a combination of things, but the only thing is that the financial institution or the bank who's at the back is someone who gets affected because of this, because the money doesn't really come back, and then their balance sheet takes a hit. So yeah, so these are some of the factors I'd say which have played a role.
Very rightly pointed out, about the factors that are actually behind the spike. So, and how do you think technologies such as whether it be artificial intelligence or machine learning, how can they enable companies to identify and prevent this sort of frauds?
Yeah, actually, artificial intelligence, machine learning, big data, and all of these things are actually been there for a considerable period of time. Now, it's not something which is new. If I talk about specifically around to how they are being used to protect accounts or how to prevent fraud, I would say that the companies are already doing it, specifically talking about lending institutions who want to issue loans in a matter of seconds, and now we have a concept of neobanks as well, where banks do not have a physical presence, but they only have digital presence, and then we call them neobanks, and then they want to open bank accounts without any sort of physical interaction. So they are already leveraging all of these AI/ML technologies to, just to give you an example, like let's just say, taking your example, let's say Shivani. Now, Shivani, I'm pretty sure that you will have a bank account with some sort of bank, and then possibly due to that, you have some sort of presence on the in the CIBIL or the credit bureau, as we say, right? So you have some sort of presence there. So all these institutions, banking institutions, you go to them for a loan. Possibly they'll be using your bureau score to basically assess your application, and they'll be looking at your your application data to sort of looking at whether you have a capacity to pay or not. In fact, and all of that is leveraging through AI and ML. And then, in fact, now you must be seeing a lot of advertisements around video KYC, where the KYC can also happen sitting at home, right? So those solutions are also something which are being where AI ML is leveraged to basically do that KYC thing online rather than a person being visiting a bank or a financial institution physically. So all of that interactions happen online, where documents are uploaded, provided online, and then checked online. So you don't need to visit any financial institution. Secondly, we talk about the other segment where, let's just say, the person doesn't have any sort of history, right? Let's just say maybe he's just he's just started earning. He doesn't have any, the first bank account he's opening or the first loan which he's taking. There is no history which this guy has, or maybe he comes from a tier two city, all of that. So, banks and these financial institutions, what they're doing is adopting alternate data approach to sort of to assess the credit worthiness and the risk checks which they are doing on their side. An example could be like, what they do is that they look at your SMS data, like they look at your SMS information and try to find out what is your average bank balance, right? And other factors also they'll look at on the SMS side. Of course, for that bank account necessary, but with SMS data, they're going to be analyzing certain information of yours to get certain insight, or they'll be looking at location data, where you come from, and all of that is analyzed to see which city you belong to or which city you're currently in. That could be a factor. Or they also look at your social media information, right? People are also looking at social media information in the sense that, what are your likes and dislikes, and there would be have some sort of algorithm at the back to figure out whether to build a sort of a credit profile of a certain customer. And in fact, now a lot of organizations, what they're doing is they're doing psychometric analysis as well, where they have a certain questionnaire which is thrown at a person when he's sending an application, and there are certain questions asked, where on the basis of that they assess whether this guy could be, worthy enough to maybe given a loan, or all those things can be done, right? So there are a lot of these factors which are already there, right? So it's not something which is new. And our, of course, approach is to sort of basically add one juncture to the journey and then be part of that.
Thanks for elaborating upon that, Manish. And as huge amounts of data is also being generated every single day, like what are the benefits of using non-personal and consumer sensitive data in present day scenario?
I think first of all we need to understand that for opening a bank account or for taking a loan or any online business account if you want to open, you have to provide some information, right? Without that, nothing can happen, right? If the company doesn't know you, then how will they give you a loan, or how will they open a bank account, right? So personal information has to be sort of given. That's something which is something to understand in the beginning. But having said that, now what is happening in India specifically is that globally we do have certain protections like GDPR, which we call as General Data Protection Bill, where General Protection Data Law, which is passed by the European Union, where all of the information which the institutions are collecting of individuals, they have to keep it safe, and then the guy has some sort of a method to even revoke that particular consent which this guy has given to the institution to collect that information. So and they have to remove it after a certain period of time as well, right? So all of these regulations are there abroad, but in India we don't have them. But in India also we started embracing this because even as we speak in the month of December, the Parliament is going to be talking about the personal data protection bill, which was tabled somewhere around in 2019, but now it's going to become a law soon. So the institutions, all of these companies who are actually dealing with personal data of customers have to be mindful of the fact that even if they're collecting the information, they have to be collecting that information in a way that it has to be stored properly, and then it shouldn't go out of India. And then the user will have a consent to even remove this information which he had provided consent on. That is one. In fact, in the month of November 2021, last month actually, RBI, Reserve Bank of India, which is a regulator, has come up with strong regulations for, I would say not regulation, but recommendations from their side for digital lenders specifically, that all of these information which they are collecting of these guys who are sending them applications has to be sort of protected and stored locally in India. And then similarly, they should have some sort of, and they should not first of all collect information which could be not required as such, like some information, as I was giving you example, that some Chinese loan apps were actually collecting contact information which has no use, right? Why would I need my contacts list information? Why would a bank need my contact list information to assess me, right? Possibly they were doing it because they wanted to threaten that guy later on, right? And by calling their contact. So all of that information should not be collected, is something which they're very clear on. So I think these things are something which the financial institutions and banks and all these people have to be aware of. And as less as possible, if they're able to collect personal data, is something which they should always do, right? Of course, they have to take personal information. Without that, they can't really know who they're dealing with. But in those cases where the information is not required, they should not sort of get into that territory, is my feeling.
Absolutely. And back to emerging frauds again. So what are the techniques, you think that online fraudsters are using these days? And how can we actually stay safe, from such kind of frauds?
Yeah. So, see, first of all, we have to understand that, fraudsters are also people like us, right? And they are also doing their job, right? Like me and you, we are doing our jobs. Fraudsters are also doing their jobs, right? So, and then the only thing which we can do, or when I say we, I mean as normal people, and then as a bank, as a bank or a financial institution who are actually I mean, whose image gets bad once a fraud of this kind happen, can sort of accept that particular fact and then try to have an approach to sort of to be not in a scenario where we get affected because of all of that, and we have to basically stay a step ahead of them. That's essentially what we do. And when you talk about a fraud, right? So I've always believed that fraud is something which can't just happen like that. It's always like a jigsaw puzzle. Like a jigsaw puzzle gets complete only when all the items are collected together, right? So I'll give you an example to the same thing which you said in the beginning of the call. We are seeing UPI frauds, card scams, and all of that. So I'll give you example around that. So see, for a fraudster to complete the fraud, he has to complete that jigsaw puzzle. So there are few parts of the jigsaw puzzle which basically are there. An example could be like, maybe he will need access to your email ID and username, right? You need those details. That's one. Secondly, he'll need maybe your password as well, your account details as well. And then lastly, he will need your OTP as well to basically complete all this picture, right? Without that, he can't do a transaction, right? Because if he doesn't know who you are, then he can't do the transaction and he can't complete the transaction, and the fraud will not succeed. So there are different aspects which are there. So basically, to get your username and email ID, what he does is, so there are you heard that there are a lot of data breaches which has happened across the world, right? That you must be hearing Domino's losing their 150 million user base data, or maybe Twitter losing so much data and all of that, right? So the first case gets solved from there, where a fraudster sort of gets the user account information from all of these data breaches has happened, which obviously my solution will not be able to also stop. If the company who's actually collected your information, if they do not have a control in their place, a cybersecurity control, information security control in place, then that information would be leaked out. So that is something which is easily there, and then you might be finding scenarios where all of this data is easily available on the dark web, right? So that's first thing solved for the guy. The second thing is password. So passwords, it's very easy to sort of crack now. We have multiple solutions where you can crack a password of a particular account. If you have generic passwords like 12345 or Pakistan or India 123. All of these passwords can be easily hacked within a second. You must be getting a lot of this information is also there in the media as well. This is one. Secondly, when I say that these data account these data when these data breaches happen, when the your account information gets leaked, maybe through a Domino's or some other data breach, what happens is that your passwords also get leaked, right? And then now what we have seen is, according to a global survey by a big cybersecurity organization, what we have seen is that users do not really change their passwords. So the Twitter password will also be the same, Uber password will also be the same, the banking password will also be the same. So what happens is that even if your Uber account gets hacked, your bank account also gets hacked because that information has sort of leaked out. And we don't have a habit of sort of changing passwords. We have different passwords in different accounts. So password is also gone, right? So that's another way of getting the password. So basically, two things the fraudster now has. Now we're talking about third things, the account details. Account details, of course, are access to multiple sort of things, right? Where he can, if he's able to get into one account, then he's also able to get into your second bank account or your third credit card account and all that, because the account details usually are consistent, are same, right? And then lastly comes the most difficult thing to get, which is the OTP, right? That largely happens through, you must have been hearing a lot of things like people, you will be getting calls or for, your bank account KYC has been not been updated. If you don't update it, it'll be blocked. So I will help you to do it. Some fraudster would say by calling you, or they will try to give you instructions on installing some malicious applications to basically which he can use to sort of get the OTP once you receive, because some will ask you to sort of install some sort of applications which are virtual machines where whatever you do on your phone they'll be able to see sitting at a remote location. So they try to get the OTP through that, right? So finally what happens is that all of this information, when it comes together, then the fraud is complete. So even if we are able to stop one of these things, then we'll be able to sort of stop the fraud from happening, right? So our intention, of course, is to sort of solve the other pieces which are there, where we are able to see that somebody's account is being taken over by someone else, or let's just say we identify a device change in a particular account. Let's just say I was just using a particular device on UPI right now, but suddenly I start using a different device. That becomes a high risk scenario, right? So all of these things we can do. We of course can't stop data being breached through websites, but we can stop that data being used by these fraudsters when they are sending applications or doing transactions.
Very rightly pointed out the issues, and of most of it techniques, which we actually talked about right now in our previous lines. So which type of online fraud is more relevant these days, and how can online businesses be cautious about that?
You see, there are different scenarios which could be there, and it could vary depending on, I mean, the scenario which we're talking about. Like, I could maybe briefly put it down into three segments. So there could be account opening frauds, where any lending institution or the financial institution, if they are opening an account, they might be a fraud there, where basically the most likely fraud which we have seen is identity theft, where I, as a fraudster, might use your identity or Purvi's identity or somebody else's identity who's maybe be better off as compared to me, and then more likely to be approved for a loan. And when we talk about the other aspect, which we call it as account takeover, that is something which is largely relevant for the UPI scams which you talked about, the card scams which you talked about, or somebody's bank account being hacked. All of those scenarios, this is where account takeover comes into picture, where somebody gets access to somebody's account and then takes money out of that. So where essentially what's going to happen is that, I mean, our intention, of course, would be to sort of stop that from happening. I mean, those accounts getting sort of taken over, and then we call them as payment fraud largely. Yeah, where money would actually be taken out from illegitimately from a particular account. So that could be another sort of fraud which could be there, right? So, and dealing with these frauds also has a sort of a different approach, although the data might be similar, but the approach slightly changes on the way which you're looking at. Because when the second scenario which I was talking about, the account takeover scenario, I need to know whether I mean, of course, I know that the guy who's coming back to his account is it could be the same. So my objective would be to know, to judge the correctly, that am I dealing with the same individual or not. If Manish is opening his bank account or doing a transaction, is it Manish or not? Right? Is something which I will have to do, which basically our solution is going to be doing eventually, right, to stop that fraud from happening. So yeah, so these are some of the frauds, which I mean, type of frauds, as you said, are sort of which are prevalent.
Great. And could you give us more examples on how Juicy Score is actually tackling this kind of fraud issues? Could you give us some use cases maybe?
Yeah, so if I talk about the example which I gave in the lending scenario, or the maybe the new bank account opening scenario, where a new account is getting opened, where I do not have a historical information of the guy who's coming in. So most likely, what I do is that, as I explained to you in the beginning, that we are able to identify the customer's device, right, uniquely. Now, mostly what happens is that fraudsters in the lending side, on the lending side, what they do is that they try to become mules. A mule is a guy basically. What he does is that he will have different identity information of people. Like he will have maybe Purvi's personal details along with the PAN or other Aadhaar details and all of that, or maybe Shivani's details and all of that, which he maintain in a file. And then what he's going to be doing is that he'll be sending multiple applications with these different identities to the institution, and then wait for them to get approved. But our solution, what it's going to be doing is that it'll be looking at, okay, these people might be different, but the device being used at the back is still common, right? Which basically gives a picture that, okay, this most likely to be a fraud scenario, that the same guy is sort of using different identities to basically send applications, and then maybe if one, two, or three get approved, he will be happy and then he'll scoot. So that linkage is provided by the device identification. Or the other thing could be that we are able to also figure out the real IP address from where the application is coming in from, which is a difficult task to do, because fraudsters, what they try to do is they try to use proxies or certain virtual private machines, virtual private networks, to basically give send applications to basically hide their exact location. But our solution is able to identify the real IP address, and through that we are able to sort of also find out the possible exact location, if not exact, but to an extent the exact location, because usually GPS is something which is considered personal information, so we don't really use GPS information. So we only use the IP address to even work out the location. So we can use the location to do that. And thirdly, another process would be that we look at the behavior. Right? When somebody is sending an application, so let's say we talk about a genuine customer. A genuine customer, when he's filling up a loan application form per se, would fill it in a way that he'll be reading the entire form properly. Then when it comes to reading the sort of he'll be reading the terms and condition, interest rates, and everything very carefully, as compared to a fraudster who doesn't really care because he doesn't have to pay back, right? And then a third indicator would be that he will be doing a lot of copy paste, because as an example which I gave you, that he's not using his own identity to send the application, right? He's using Purvi's identity or Shivani's identity. So he's not even aware of that information, the basic information. So he will even copy paste the name, the date of birth, which mostly a genuine user wouldn't do, right? Because he remembers that information. Because I know my name, I know my date of birth. I would never copy paste. Most likely, I wouldn't, right? I might copy paste my address, which is a larger section of data, but not my name and date of birth and all of those things. So we look at those behavioral aspects. So not necessarily that if somebody's copy pasting data, he's a fraudster, but it's that we look at a combination of things. If this combination holds true, then we say it's a high risk scenario, right? So that was example of lending, right? The application fraud scenario where a new application is coming, and it could be true for bank account also. Secondly, we're talking about the payment fraud, the UPI frauds, and the transactional frauds, right? Where you have a returning customer, right? Basically, I have to now judge that, okay, oh, Manish is doing the transaction. Is it easy Manish or not, right? I need to know. Only then I will approve the transaction, because you know that UPI frauds, when they happen, the transaction obviously doesn't get done by the victim. It's done by the fraudster who's sitting somewhere else, right? So my objective is to know whether it's the same guy who owns the account or not. So what we do is that, of course, we'll see that, okay, the device being used to do the transaction is the same device previously or not, right? Because I have a history. I will maintain a history that okay, this account was being used by a particular, I would say, user in this particular device. If the same device is seen, then I'm rest assured that okay, yeah, oh, I'm dealing with the same individual. That could be one, right? And then, or it could be we see that okay, the transaction is happening at the back. There is some sort of a high risk application being used, like there are certain softwares like we call it as Tor browsers. These browsers are being used to basically hide the entire trail of the information which basically gets collected while doing a transaction. If the transaction happens through those high risk softwares, then we call it as a high risk one. Or it could be like the example which I was giving you, that some people try to tell these gullible people to install malicious applications like virtual machines, where the example would be TeamViewer, or certain applications where whatever you're doing on the phone gets visible to these guys, or the fraudster who are sitting in the back, so they'll know the OTP and all of that. So we see that the transaction is happening through a VPN, through a virtual machine, through that particular software. Then that becomes a high risk marker on the transaction space, right? So there are a lot of things which we are doing on the transaction space as well, right? Which can basically which I mean, the indication which can provide to a financial institution while the transaction is happening. Through that, through those insights, basically these institutions will be able to sort of stop the transactions at the outset, right? Even before the OTP is entered and then a transaction gets completed.
Wonderful. Juicy Score is really doing a great job in this particular front, which is very vital in present day scenario. So, lastly, where do you want to see the company? Maybe, down the lane 5 years or something like that?
Yeah, so as I said that we started our operations in 2016 from Russia, and then now we are present in more than 24 countries, including India. So in India, we have a few customers already. We started our operations in 2020, early 2020, and then now I have joined them a couple of months ago to basically expand our operations in India. And then, in fact, as we speak in India, we are engaging with the top digital lenders in India to solve this specific problem for them. And if I talk about the global approach, so we are already there in Southeast Asia, and then we are expanding in LATAM, the Latin American market, and we already have a first customer in the UK as well. And in fact, we are also going to be expanding our operation in the United States now, right, where the discussions are going on. So we'll have a few customers there as well. So the expansion is something which you call it a very rapid one, because our solution is something which I would say which it was focused on doing the job, right? There's a specific objective which we have, a problem which we are trying to solve for our customers, and our objective is to sort of work on that, and then provide sort of nonsensical. I mean, in the sense that something which has a specific thing or a specific problem to solve, which basically does the job for a financial institution whom we are sort of working with. And one thing which I want to highlight is that our company is something which has not had any funding till now, right? So we are a profitable company. We started our operations, as I said, in 2016. Since then, we have not even taken a single penny of any investment from anyone. You must be hearing a lot of companies taking maybe having a 50 million round, 100 million round, 200 million round. So we don't require that till now, right? So you can say that basically the thing which we do for our clients is something which makes sense to them, and is something which actually definitely helping them, right? Which speaks volumes about the specific point which I was making.
That's amazing. And optimistically looking forward to see even more innovative solutions coming up from Juicy Scores end. Thank you so much, Manish, for joining us today. It was a pleasure talking to you. Hope all our listeners have gained lot valuable insights from this session.